is this worth it? Because that's about $8,985 that could stay and compound inside my 401k. A wrong decision here for me would risk hundreds of thousands of dollars lost at my retirement. No pressure at all, right? The question is, what is a higher return on my investment? Continuing to invest inside my money on a 401k, or using that money in a future Bitcoin crypto IRA, or a mix of both. Like the video if you want to see the financial model and tool that I built as well. As a day trader, as a swing trader, so I was looking for ways to reduce my overall money loss because of the taxes. This is done through a crypto Bitcoin IRA. Essentially, it's a Roth IRA, which is an individual retirement account in the US, specializing in investing in specifically Bitcoin or other cryptocurrencies. Because a Roth IRA has the same tax benefits for a variety of investment options, including mutual funds, stocks, bonds, ETFs, CDs, and money market funds. Trade mutual funds and other securities within your account without any tax consequences. I was enamored by this idea of tax-free crypto investments. So it was happiness and rainbows and unicorns again at first. Then I saw the added expenses, a $29.95 monthly account fee. This is specifically with iTrustCapital because I did my research, and this was one of the overall lower costing, transparent fee crypto IRA companies. My natural inclination is to dismiss the idea and be highly wary of any claims. But I remember this quote: whenever you find yourself on the side of the majority, it is time to pause and reflect. Mark Twain. Majority of people don't understand cryptocurrency in general. And because of that, there is a massive opportunity. As an early adopter, there's gonna be inherently a lot more risk. The greater the reward, the greater the risk. I'm a business analyst consultant for my day job for a huge Fortune 500 company. I dig deep into data to make better informed decisions, which is part of what I do on a daily basis. And this is also why multi-level marketers hate me. Because there's multiple times when people from various multi-level marketing companies would try to convince me to roll my 401k into their investment product. One example of this is something that's called an IUL, Index Universal Life Insurance. Like any salesperson, they play on the fear of loss, citing massive losses of the stock market, showing crazy charts of different stock market crashes, and the percentage losses you would have incurred if you had your money inside a 401k. Then they proceed to pull out a piece of paper and start to do some basic math, and in worst case, pulling out a napkin as their end-all, be-all, God's gift of financial analysis to prove their financial product is better. Making a whole scheme of if you get this many people, you're gonna make this much, and if you make this much, you're getting a Ferrari, right? But they don't go over the pros and the cons. And in this case, an IUL has cap losses, and you'll only lose a certain percent, so it has a floor. So it won't go past zero if the stock market goes past zero, which looks to be a great investment. This also applies to the gain, which is something that a lot of multi-level marketers just fail to mention, and the person that was trying to sell me failed to mention. This limits your potential loss, but within downward trending bear markets, it also caps your gains in massive bull markets. So you have anywhere from 6 to 14%. Here's the actual return between 1995 to 2019. It's about 8.12%. If there was a 14% cap, you would get a little bit more at 8.47. But one of the other things that when you go deeper into the analysis of an IUL is that IULs also do not include typically dividend returns, which means that you're not going to get the compounding dividend returns when you're investing in the S&P 500 or other companies and stocks that offer that. And when you factor this in, it brings down the return actually lower for the IUL product. So if someone's pitching you an IUL and you want more information, links are in 2 main articles that I found very interesting. So check that out if you want to dig into this more. I bring this story about IULs not because I hate multi-level marketers. I'll respect their hustle and their grind. It's because I hate the surface level analysis that they use to sell without accounting for each individual person's situations potential nuances, and their skills, strengths, and weaknesses. So they kept trying to continuously sell, even though I'm a financially savvy person who rebalances his 401k with an annualized return at 11.7% currently. So looking back at the numbers, I return a higher amount than they forecasted on their sheet of paper and that napkin. So with this video, I don't want to mislead you. So I'm going to present the cons of this analysis and be as transparent as I can. So look for the time codes in the description and jump ahead to the actual tool and analysis of my finding. Disclaimer, I'm not a financial advisor, so what I'm about to cover in this video is my financial opinion and should not be taken as financial or investment advice and should be used for educational, informational, entertainment purposes only. Please do additional research to see if this makes sense for your own circumstances. So this analysis was done through the forecast sheet within Excel. This forecasting method, according to ablebits.com, is based on the AAA additive error, additive trend, additive seasonality of the exponential triple smoothing ETS algorithm. This builds on the limitations of exponential smoothing by accounting for trend and seasonality plus confidence intervals. I went through a lot of resources online to understand this forecasting method. I'll leave an extensive list of everything that I read in the description below. This is currently one of the most popular ways to forecast within business. The math, the code behind it are very complex, at least to me, and because Excel's forecast sheet is based on the ETS algorithm, it's a black box that we can't really look into the internal code to understand more about what it's doing differently and what the limitations are. This is the first limitation, is not fully understanding what Excel is doing for this forecast. This is also based on historical values. Historical values are not an indicator of future price action. This is a limitation of forecasts in general, not being able to predict outlier events that can cause major trend reversals. For example, this would be COVID and the effects of the pandemic and then the subsequent quick recovery. Another limitation is outlier events within the historical data. This model was created during COVID. It's gonna use that as a trend, which I don't mind. It's going to predict lower for the forecast, so we'll see what happens. I'd love to nerd out more on what I learned, but this video is going to become a lecture. Look at all the additional resources. I'll put them all in the link description below so you can learn more. Last, while I built this to the best of my ability, I double checked my work. The last limitation is potential human error. I'm infallible. I could have made mistakes. I don't know what I don't know. So last is a potential error on my end. Now that we know some of the limitations, let's go into the inner workings of the tool and financial model that I built. Here are major factors to account inside this analysis. All major expenses I wanted to account for. Crypto IRA monthly account fees, bank wire transfer fees. Luckily, this is going to be going away with iTrust implementing direct deposits in Q4 of 2021, but as of right now, I want to include it. Crypto IRA trading fees, the difference in potential tax brackets to account for potential saving, personal tax rate at retirement, 401k fees. Other things I wanted to account for was what is my accumulated amount based on the forecasted prices for each year. What is my 401k match and including that in max contributions for the IRA, and then able to change and test values and scenarios based on expected returns for both 401k and for Bitcoin. So here's how the tool works. This is the main tab, it's a summary tab where I can change important information. Everything that I talked about, everything that is relevant that will sway and change the analysis and the impact, I added in here for these values for the tool to pull off of. There are also 5 different income allocation mixes that I wanted to test. 10% to 0%. This is just me investing fully into 401k. Down here, 0% in 401k, 10% into crypto IRA. That means and invest everything into a crypto IRA and then everything in between. So these are all dynamic formulas within the model that will update based on the values that are inside the summary tab. Next is a Bitcoin historical data tab, which is just a date with the daily close all the way starting from the earliest date that I have access to, which is 7/17/2014 to when I first created this 4/23/2021 when Bitcoin was around 50,543. And you might be thinking, Jeff, so why don't you just update and rerun the tool? I was going to do this, but then I stopped and then I wanted to see how well the forecast is going to predict future prices. As I wrote this initially on 8/13 at 10 a.m. PST, Bitcoin's price was at 46,551.73 cents. The bullish forecast was actually surprisingly close to this, $46,374.85. Surprisingly only off by $176 and some cent, where Bitcoin's price was above the bullish forecast. So while the previous day weren't as accurate as this one, I was excited to see where the forecasted data does overall, and then use this comparison to enhance the tool further. What things I want to say this model does not account for: salary increases or annual adjustments, inflation, forecasted values beyond 100 years of retirement. So if we happen to start living longer than the expected retirement age, then I'll adjust it then. This focuses only on Bitcoin. This does not forecast Ethereum. This does not forecast Cardano, DOT, or anything else that may be available that has growth potential. I haven't included in that. So I just wanted to focus on Bitcoin. For now, let's get to the analysis, let's get to the tool, and let's look at median average numbers for someone living inside the US. So median US salary is about $44,835 according to ZipRecruiter. Median 401k balance for those under 25 is $2,240. Ages 25 to 34, $13,265. 35 to 44, $32,664. 45 to 54, $56,722. 55 to 64, $84,714. And 65 plus, $82,297. The average 401k employer match is about 4.5, but when we go into the median, 4%. And then here are the tax brackets for filing in 2021. Again, the tax brackets may change from now to when I retire in the forecast, so it doesn't account for it. It uses the current tax brackets. 401k average annual return, this also depends. SoFi Learn, they say that the average rate of return for 401k from 2015 to 2020 was about 9.5%. But that you have to take into account this is only within a 5-year period. So over the course of 25 years, 30 years, 20 years, this rate of return may not be reliable. But because I'm leaning towards keeping my money in a 401k, just for the stability of having my retirement money being in there, because I'm already trading and have medium-term accounts, I want to keep my money in a 401k. Because I want to keep my money in a 401k, I'm going to project higher. Financial planners always talk about it's going to be around 8 to 10%. So I'm going to go in the higher end and say 10% 401k return for this analysis. Average 401k fees, it's about 1% of assets a year. If you're an index fund, you can get that lower. Personally, I'm only at 0.2% for my 401k fees, but we're going to go with the median. I'm going to be using iTrustCapital's Crypto IRA account fees because this is where I have my own Crypto IRA and found that they have some of the lowest fees. Link in the description below if you want to get 1 free month when you sign up. If you're interested, after this video or right now, you can just go there, sign up and get 1 free month, or go over there and get more information. A breakdown of the fees: monthly account fee $29.95 a month, bank wire fee $25 per bank wire. This is with my own account. I plan to limit the amounts that I plan to transfer to reduce overall costs. And then in Q4, they have plans to implement direct deposit, ACH. So this fee will go away once that's implemented. There's a 1% trading fee, so 1% when you buy or when you sell. For this video, I'm only buying each year and I'm not selling until retirement. Let's take a look at every age group except those under 25 using the national median numbers in this financial model. We'll use 10% of the income since that is typically the bare minimum suggested to save. So that's what we're going to be going by, is going to be at 10%. And then I'll be using the Vanguard data again for median 401k balances by age. Pause the video if you want to look at those values. One new development that's happening is iTrustCapital plans to incorporate crypto staking in Q4 of 2021. So I want to do the analysis with and without staking, since staking is not available yet, but it will be. And I'm gonna guess that staking interest rates will be competitive. Voyager is offering about 5.75, Celsius is offering about 6.2 up to 1 BTC, and then 3.51 after 1 BTC. Based on this, we're gonna use 4% as the competitive Bitcoin staking rate. For the age group of 25 to 34, I'm gonna use the age of 25 and just assume we're gonna start at the lowest age. Median salary is going to be $31,001. Median 401k balance is $13,265. Years till retirement, 35 years. So with the conservative forecast, the best forecasted return is investing in a 401k only at $799,512.15. With the Bitcoin retirement price would be at about $356,552.12. Just pause the video to take a look, because if I were to read out all the numbers, this video is going to get super boring. Pause the video when you want. So a conservative forecast with 4% staking, still a 401k only at the same price. Crypto IRA goes up a little bit, but it still doesn't beat the return on a 401k. A bullish forecast, again, a 401k still beats a bullish forecast. And this is even with a Bitcoin retirement price at about $1,334,812.65. But when you look at the best forecasted return in a bullish case scenario with 4% staking, a crypto IRA goes up and wins at $1,119,282.58. Now, for the age group 35 to 44, age used is going to be 35. Median salary is $50,008. Full median 401k balance is $32,664. Years till retirement, 25. The conservative forecast, best forecasted return, 401k only, $593,273.44. The retirement price is going to be at $268,262.83. When you look at conservative with 4% staking, best forecasted return is going to be a crypto IRA at $616,542.84. With a bullish forecast, the best forecasted return is a 401k only at $593,273.44. And with the Bitcoin retirement price being at $874,786.47. If you add in staking, a crypto IRA only wins at $900,798.38. Moving on to the age group of 45 to 54. Again, age used is going to be at the lowest at 45. Median salary is at $53,002. Median 401k balance is at $56,722. Years till retirement is going to be 15 years. For the conservative forecast, best forecasted return, a 401k only, coming in at $299,485.41. Bitcoin retirement price forecasted is $166,560.79. Conservative forecast with 4% staking goes up for the crypto IRA at $316,068.45. Bullish forecasts, again, it's going to be the crypto IRA going up. This is going to be at $322,071.12, with the Bitcoin retirement price being at $465,741.33. Now you add the bullish with the 4% staking. It's going to be, again, crypto IRA only at $401,629.93. Next group we're going to go over is the age group 55 to 64. Age use for this analysis is 55. Median salary is going to be $54,510. Median 401k balance is $84,714. Years to retirement is 5. Best forecasted return for the conservative forecast is going to be a 401k only at $132,020.07. Here, the Bitcoin retirement price is forecasted at $78,276.69. With the 4% staking, the best forecasted return is going to be a mix of 2.5% in 401k, 7.5% in a crypto IRA, leading to a total return of $132,160.48. The bullish forecast, best forecasted return is crypto IRA only at $136,054.35. Bitcoin retirement price is at $152,065.17. Add in the bullish case combined with a 4% staking, Best forecasted return, Crypto IRA with $139,744.83. So here are my thoughts on the findings. In most conservative cases with no staking, a 401k has a higher expected return, except for age 55 with only 5 years till retirement. Because of the volatile nature of crypto, if I were 55 and going to retire within 5 years, I'd keep investing inside a 401k and not open a crypto IRA. This is because the potential gain to risk of losing a large percentage of your crypto portfolio, it wouldn't be worth it to me, because if I was 55, I wouldn't have enough time to ride out the volatility and unexpected events, because you would want to have it in more stable vehicles at that point. But that's my personal opinion and my own risk tolerance for what I would do if I was at that age. So another thing I found is crypto staking is crucial because it adds more to the compound interest that you gain over the years. So this makes sense. Other things is I would max out my crypto IRA in the scenarios where a crypto IRA has a higher return, just to take advantage of the tax benefits. This also means increasing the percentage of income saved depending on your salary. For these forecasted values, for some people, the conservative bullish price forecast might be too high. But based on different companies, thought leaders, articles, and analysts, I believe I'm in line with my own beliefs where I think this is going to be headed. This analysis assumes a 10% annualized 401k return, so there are adjustments needed for lower or higher performing 401k returns. And you also have to count, is this sustainable till retirement? Last thing I want to talk about is just compounding in general. So again, more time, more money saved earlier will result in higher amount regardless of 401k or crypto IRA. So because of this, I currently am not contributing 10%, but I'm using 18%. This video almost became why I'm closing my crypto IRA, because the original analysis didn't include staking. But once I included staking, the decision was easy for me to open and keep open a crypto IRA till I contributed to the maximum amount. I did this because I have a higher risk tolerance. I have long till I retire, 25 years. I can still contribute a higher percentage to my 401k. And the conservative analysis with 4% staking is what drove my decision. This matches my belief in where Bitcoin will be, and this is keeping my general investment strategy somewhat diversified just in case I'm wrong. And most of my income is still going into a 401k because this offsets my risk, since 401k compared to a crypto IRA would be a more stable retirement vehicle in terms of volatility and stability. I understand that Bitcoin is going to have massive volatile swings, and I can handle this because I'm going to be accumulating for retirement. And this is something to note if you're thinking about a crypto IRA, is can I handle those volatile swings? Within iTrustCapital's crypto IRA, there are other large cap cryptocurrencies like Ethereum, Cardano, Polkadot that have higher potential. Depending on your view of Ethereum and other cryptocurrencies, there could be higher growth. If you're interested in opening up a crypto IRA, I'm personally using iTrustCapital because I love their service so far, and their fees are some of the lowest and most competitive in the market. Check them out. Use my link in the description below. You'll get 1 free month if you open up an account. It is also an affiliate link, so it does help me out and the channel at no added cost to you. Use the link, visit it, get more information, see if this makes sense for you. They are extremely helpful, so reach out to the team and get any of your additional questions answered. Let me know in the comments below if this was helpful and what types of future analysis or videos you'd like to see in the future. Take care, we'll talk soon, and watch the next video.